Okay, then for the corporation, going back, okay, if you are trying to incorporate or to incorporate a corporation, there's some organizational costs. Okay, these organizational costs represent costs incurred in forming or organizing a corporation. Okay, this cost includes A. Legal fees. B. Incorporation fees. C. Issuance costs. Okay, legal fees in connection with the incorporation, drafting of articles of incorporation and bylaws and corporate registration. Ito po yung mga documents notarized by legal practitioners, or you may call them an attorney or attorneys, no, to form the corporation. Why you need attorneys? Because a corporation is an artificial being created by the operation of the law, and if we say law, the profession that has the highest form of authority in law are the practitioners of law, which are in the forms of attorneys. Okay, incorporation fees are like accounting fees. One of the incorporation fees would be indirectly related to the costs or expenses you need to pay for the subscription and the payment of the subscriptions. Okay, the next, share issuance cost, or this is the cost that you need to pay to distribute or to sell or to sell the shares to other persons or the other shareholders, and to make the documents 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 that will give its shareholders the rights or the ownership, such as stock certificates, okay, stocks and transfer books, seal of the corporation, underwriting of promotional fees, which is more on the commission side. Okay, this is the fees that you need to pay to the agents in selling or issuing those specific shares, accounting legal fees related to the share issuance. So therefore, those are the um, organizational costs that person or persons or shareholders or incorporators that needs um, to pay. Okay? Note, organizational cost shall be recognized as expense when incurred except for the share issuance cost, which is charged to share premium on the issuance of new shares. If the share premium from the issuance of new shares is not enough to absorb the share issuance cost, such amount shall be recognized as expense. Okay? There's two types in accounting for the initial share issuance, okay, or the authorized part, no, to authorize. First, or one of the counting methods that you can use is the memorandum, and the next one is journal entry method. If you say memorandum method, you'll just need a memo or a document stating that the authorized share capital of the corporation is these shares at a par value of this number of peso. Okay, with the date. Okay, no entry is made for authorization of the share capital. Only when the share capital is issued that is credited to the share capital account. Okay, take note, this accounting for share capital means that the recording of the authorized share capital, not the issued or outstanding share capital. Those terms will be different and will be tackled later on. Next, journal entry method. Okay, this is the most familiar term to all the BSA students. Okay, if there's a journal entry method, then definitely that's a double entry recording system. Okay, since it's a double entry system, there's a debit and there's a credit. Okay, authorization for share capital. Share capital is recorded by debiting unissued share capital and crediting authorized share capital. Once issued, authorized share capital is credited to unissued share capital. Authorized share capital is credited to unissued share capital account. Okay. Next, okay. Accounting treatment for share issuance at discount, share issuance for non-cash consideration, and delinquent subscription. Okay. First of all, share issuance, share issued at discount. Okay. If we hear discounts, we should expect less payment, or we will receive, if we are selling at discount, we will technically will receive a lower amount. Okay, if we are buying at a discount, we will be paying lower than it should be. Okay, share capital is credited at par. So if the example is uh, the Len Corporation issued with an authorized capital of 10,000 shares at 10 peso par. Okay. Issued 100 shares at 15 peso. Okay, 15 peso with a proceed of 115. How much is that? 1.5. Okay, 1.5. Issue. Okay. So if it's 100 shares times 15 peso, that's 1.5. Okay. Next, the share capital is credited at debit cash 1.5. Okay. Credit share capital at 100 shares at 10 peso. And the 500, the 100 times 5, which is 10, 15 minus the par value will be times 15 minus 10 equals 500. So the last credit will be share premium. Should have been, no? Should have been. But since this is a discount, you may consider paying 100 peso, 100 shares was issued at 90 peso, 90 peso proceed per share. So that would be debit cash, 100 times 90, that's 900. Credit share capital, 100 times 10, 1,000. And the last debit, okay, last part, which is the remaining 100, will be debited to the discount on share capital account amounting to 100 peso. Okay, the discount on share capital is a deduction from the total shareholders' equity. Okay, shares issued for non-cash, it means that you sold or issued the shares for the consideration of a building, of a transaction, of a car, or building, non-cash assets. Okay? Order of priority for measurement of equity, fair value of the goods or services, fair value of the equity shares issued, and or last or but not the least, the par value or stated value of the shares. Okay? If the fair value of the goods or fair value of goods or services is given and the fair value of equity shares is also given, we will use the fair value of the goods services. Example, um, okay, if Les Corp with authorized shares of 100,000 with a par value of 15 peso, 15 peso par value issued 1,000 shares for second hand car with a book value of 500,000 and with a fair value of 450,000. The share is the fair fair value of shares issued is 30 peso 30 pesos. We will use the 450. We will still use 450 despite the appearance or the existence of the fair value of the share issued, because the priority is the fair value of the goods or services received. Okay? Received. Okay? So it means that debit, car, credit share capital. This is 450. This should be 1,000 times 15. That's 15,000, and the share premium would be the difference of 450 and the 15,000. That should be 435,000. That's how we will be able to account or treat the share issues for non-cash consideration. Next would be the delinquent subscription. Okay. Delinquent subscriptions are sold in public auction to the highest bidder at a price that normally includes a balance due on the subscription, interest accrued on the subscription due, and expenses advertised and other costs of sales. This delinquent subscription is the amount or the unpaid amount in the subscription or in the incorporation period. Okay, this part, the remaining 75 or the 25 that has not the remaining 75 that has not been paid. Okay, it shall be given to the highest bidder for a price normally includes the balance due on the subscription. What's the total amount, which is usually the share capital times the par value plus the interest accrued, okay, from the time that it's due at the time that the auction will be paid or the highest bidder will be paying, and its expenses in the advertising and then other costs of the sale. And that's it for the meantime for the accounting and the treatments of these kinds of transactions.